The first theme that we have today, it's the paint stocks which are under pressure on the back of demand slowdown in the sector that we've seen. Now, Mahima joins us now to break down what's going on with the sector and what are brokerages as well saying. Mahima?
Right, so paint sector has remained under pressure in the first half of FY25 and brokerages have reckoned that this will continue in second half also. Considering a couple of factors playing its role in slowing down the demand. The first one being that demand is not just hurting the big cities, but it's not just in the painting space, it's overall in the consumption space. We've seen that the FMCG urban market is about 1/3 of the total market and seen a 2.4 times slowdown, and this is because of surging housing cost as well as lower wage growth. Now, in terms of the other factors, entry of new player has initially hurt the market leader, that is Asian Paints. Asian Paints dominates big cities and hence suffers more. Berger Paints on the other side is present in the tier 3 and tier 4 cities, and hence it is less affected by urban slowdown as well as Birla Opus, because Birla Opus is currently targeting the tier 1 and tier 2 cities. Indigo, on the other hand, has been an outperformer and it has seen a 2 to 3x growth as compared to its industry peers, and this is because of its differentiated products as well as its presence in tier 3 and tier 4 cities. Now, in terms of how Birla Opus, the new entrant that is kind of bringing the competitive intensity into the markets, is faring out, where Birla Opus has garnered around 2 to 3% market share, and as per the conversation that we had today with Berger Paints management, he said that it has garnered around 3 to 4% market share. It aims to achieve a high single-digit market share by FY25. And lastly, the total capex spend right now stands at 85% of the total projected cost. Now, in terms of the competition hurting established players, Berger Paints has said that it has lost around 1.5% growth due to competition, and dealers are earning 7 to 8% incentives from Birla Opus versus that of 3 to 4% from Asian Paints and 5 to 6% that of Berger Paints as well as AkzoNobel. And Birla Opus selling price is 5% lower than that of Asian Paints. Lastly, what are these incumbents aiming at to retain their market share? Well, they're kind of raising their rebates by 2 to 3%. They're offering higher incentives for project businesses. They're also extending these incentives to dealers even if targets are not met, and they're matching higher cashbacks offered by Birla Opus and improving their service levels. And lastly, Berger is now focusing on the metro cities. So this is the overall view as to what is happening in the entire paint space and what's the outlook going forward.
For laying that out for us. That's a perfect opportunity to introduce our guest today. We've got Shalibhadra Shah, who's a CFO of Motilal Oswal Financial Services, and Sharmila Joshi of sharmilajoshi.com. Thank you so much to the both of you, and thanks so much for taking the time. Compliments of the season to you and your families. Mr. Shah, I'll come to you first. What do you make of the space? We just kind of tried to lay out the context for you to tell us how you view these paint stocks. Asian Paints, favorite for most portfolios, down 33% from the 52-week high. What would you do with this? Mr. Shah, I think you might just be on mute.
Yeah. Now, good morning. I'm joining on the capital market side.
Okay, let me just try and figure this out. In the meanwhile, let me go across to Sharmila Joshi. Sharmila, can you give us a sense of how you see the paint space? Like I was saying, Asian Paints down about 33% or so from the 52-week high. People still holding on to patience, thinking that there might just be a turnaround. What would you say about the evolving trends in the paint space?
So very honestly, what I feel is that a lot of what we are hearing now is something that we've been dealing with for the past at least a year, if not more, because the fact that there was going to be increased competition in the space is something the market has known for a while. And if you see, it is what you were alluding to. Asian Paints is nowhere the stock that it used to in terms of the valuation that it demands and the stock price activity that we have seen. So according to me, the pain that they were going to feel because of increased competition is something that market had already accounted for. Now we are actually seeing it, now that the players are in the market, you are actually seeing the effect that it has on their market share and what they are doing to fight it, etc. So, I think that's a bit that has been playing out over the last, 1.5 years, and probably to my mind, if that were the only concern, then we would be sort of nearing the end of the corrective cycle, and things would sort of normalize from here, and you'd see how they dealt with the competition, and you take it from there. But I think also this, what I would really keep an eye on going forward is this whole theme that we have seen emerging over the last 3 or 4 months, the kind of FMCG growth that there has been, and the slowdown that we have seen over there, and how that is affecting various markets. So, if we were to get positive signals on that things were being done to put demand back on focus and take care of that side of the picture, then I think things would look better for a whole host of sectors and companies, paints too. So, that's where actually my focus would be, because I think that this whole thing of competition, new players coming in, the market share they're going to get is something that is now going to be, is something market has understood and is now going to be part of the sort of, picture for paint companies. So the companies I definitely like, whether it's a Berger, Asian, only I think you need to be on the sidelines for now and see how this picture emerges before you take a call to really buy fresh.
Okay, so let me add to that then, Sharmila, because if you say you wait for things to emerge further, then what if you're holding something like an Asian Paints and you've given up quite a bit of ground? Would you sell at this point or continue to hold?
See, my sense is, which is why I said that we've been seeing this for the past 1.5 years or so. So I think that the early signals were there around that time from where the stock has started slipping. So, if you're still holding it, that means I'm assuming that you're in the stock for the long haul and probably your buying price is much lower. Then I think you need to keep the faith and just stay invested, which is why I sort of addressed that don't buy afresh, because I'm not seeing that turnaround. I'd expected to see the turnaround, but I'm not seeing that turnaround come just yet. I think it's really more to do with the fact that we are seeing this whole despondency over FMCG and demand, etc., more than really just what's happening with the paints play. And of course, I think individual stories have also taken hit because of issues within the company like Asian Paints, etc. But that said, I think if you're a long-term investor, you need to stay invested.
Got that view, Ms. Sharmila. Thanks so much for that.